Anthropic, best known for Claude AI, is preparing for what could become one of the biggest AI IPOs in history. The company is already one of the most valuable AI firms on the planet. It has raised tens of billions of dollars from investors who apparently looked at an industry that burns through money at astonishing speed and said, yes, more of that. But you've probably already heard the standard story. Anthropic is growing. AI is booming. Investors are excited. Everyone is changing the world. You know the drill. What you may not have heard are some of the deeper facts surrounding the company. Not necessarily secrets, more like details hiding in plain sight. Facts that many people technically know, but rarely stop to think about. Some of them may not even matter. Others might matter a lot. And a few become significantly more interesting once you realize they involve one of the most important AI companies on Earth. For example, Anthropic was not founded by a couple of random entrepreneurs who woke up one morning and decided to disrupt an industry. It was founded by former OpenAI insiders. One of the largest competitors to OpenAI was built by people who used to work at OpenAI. That's a little like discovering that one of the strongest challengers to a championship team is made up of former players from that same team. The company was founded by siblings, Dario and Daniela Amode, along with several other former OpenAI researchers and executives. They didn't leave because the office coffee machine was acting aggressively or because somebody forgot to approve their transportation reimbursement forms. The real disagreements were reportedly much bigger than that. They involved questions about how advanced AI should be developed, how quickly it should be deployed, and how much emphasis should be placed on safety. Now, to be fair, disagreements happen inside every major technology company. But most workplace disagreements don't result in people leaving, raising billions of dollars, hiring top researchers, and building one of the most powerful AI companies in the world. That's a fairly ambitious way to submit feedback. What's fascinating is that Anthropic's existence itself tells us something about the AI industry. The biggest threat to OpenAI wasn't necessarily coming from a garage startup. It came from people who already knew how OpenAI worked from the inside. And now those former insiders are competing in the same race, pursuing the same goal, and building AI systems that could eventually shape how hundreds of millions of people interact with technology. Which raises an uncomfortable question. If some of the people closest to the development of advanced AI felt strongly enough to leave and build a rival company, what exactly did they see that convinced them it was worth starting over from scratch? Next, let's talk about the structure on which Anthropic was built, because this is where things start getting weird. Most public companies operate under a fairly simple philosophy: make shareholders happy. And by happy, I mean make them money. Ideally, lots of money. Anthropic, however, was designed with a somewhat different mission. The company has repeatedly emphasized AI safety, responsible development, and public benefit as core priorities. In other words, Anthropic wasn't supposed to be just another technology company trying to squeeze an extra 3% out of quarterly earnings. At least not in theory. The interesting question is what happens when theory collides with Wall Street. Imagine Anthropic becomes a public company. Shareholders buy stock. Analysts issue reports. Financial news networks spend entire afternoons discussing whether revenue growth should have been 37% or 38%. And somewhere in the middle of all that, Anthropic faces a decision. Suppose releasing a more capable AI model could generate billions in additional revenue. But suppose the company's safety teams believe the model needs more testing. What happens then? Does Anthropic slow down and prioritize safety? Or does it accelerate because investors generally don't enjoy hearing the phrase, "we voluntarily delayed making more money"? That is not an easy conflict to resolve. One side is saying, please be careful. The other side is saying, please increase earnings per share. Historically, those two groups have not always been best friends. To be clear, this isn't a criticism of Anthropic. It's a question that may eventually face every major AI company. Because advanced AI is becoming increasingly powerful, increasingly expensive, and increasingly important. The incentives are enormous. If a company moves too slowly, competitors may pull ahead. If it moves too quickly, critics may argue it acted irresponsibly. It's a fascinating position to be in. Anthropic was built around the idea that some decisions should be guided by safety and long-term considerations, even when those decisions are inconvenient. Wall Street, meanwhile, is famous for its patience and willingness to wait indefinitely for profits. Just kidding. Wall Street once panicked because a company missed expectations by a few percentage points. So if Anthropic eventually goes public, investors may discover that they bought shares in a company that occasionally wants to think about things before shipping them. And Anthropic may discover that investors occasionally prefer growth charts that move upward at the speed of a SpaceX launch. The real question is whether those two philosophies can coexist over the long run. Because sooner or later, one of them may have to give a little. And if that happens, we'll learn whether Anthropic's commitment to safety was merely part of its origin story, or whether it remains strong when billions of dollars are pulling in the opposite direction. Now let's talk about something that sounds obvious at first, but becomes a little unsettling once you think about it. Most people assume the AI industry is crowded. After all, every week there's a new AI startup, a new AI app, a new AI assistant, or a new founder explaining on LinkedIn that they are revolutionizing human productivity. So naturally, it feels like hundreds of companies are competing at the frontier of AI. They aren't. Not really. When it comes to training the most advanced AI models on Earth, the list gets surprisingly short. Very short. You have OpenAI, Anthropic, Google, Meta, xAI. And that's pretty much the conversation. Sure, there are hundreds of smaller companies building products on top of AI. But building an AI-powered application and building a frontier AI model are two completely different things. One is like opening a restaurant. The other is like building a nuclear aircraft carrier. Both involve management. The similarities largely end there. Training frontier models now requires staggering amounts of money, computing power, engineering talent, and infrastructure. We're talking about billions of dollars. Not millions. Billions. The kind of money where a decimal point accidentally moving one place to the right can ruin someone's weekend. As a result, the barrier to entry keeps getting higher. A decade ago, a brilliant team with a breakthrough idea might have had a realistic chance of catching up. Today, a brilliant team with a breakthrough idea may also need access to enormous data centers, cutting-edge chips, elite researchers, and investors willing to spend money at a pace that would make a small country's finance ministry uncomfortable. This raises an interesting question. Are we watching the birth of an AI oligopoly? Because the frontier AI market is beginning to resemble an exclusive club. The membership requirements appear to be unlimited computing resources, billions of dollars in funding, and the ability to set money on fire for several years while calling it a long-term investment strategy. The concern isn't that these companies are secretly meeting in a room and deciding the future of AI. There is no evidence of that. The concern is something much simpler. When only a handful of organizations have the resources necessary to build the most advanced systems, those organizations naturally gain enormous influence over the direction of the technology. They decide what gets built. They decide what gets prioritized. They decide which capabilities are released and when. And increasingly, they may decide the rules of the game itself. That's not necessarily good or bad, but it is worth noticing. Because for a technology that many people describe as the most transformative invention of the century, control is becoming concentrated in fewer and fewer hands. And if the future of artificial intelligence is ultimately shaped by 5 companies with enormous budgets and access to virtually unlimited computing power, then the question may no longer be who wins the AI race. The question may be whether anyone new is still allowed to join it. Now here's another fact that doesn't get discussed nearly enough. Anthropic is often described as an independent AI company. And technically, that's true. It has its own leadership, its own researchers, its own products, and its own vision for the future. But when you look beneath the surface, the picture becomes a little more complicated. Because building frontier AI isn't just about having brilliant engineers and clever algorithms. You also need computing power. An absurd amount of computing power. The kind of computing power that makes your gaming PC look like a calculator that occasionally gets tired. Modern AI models require enormous data centers filled with specialized chips running around the clock. And here's the interesting part. Very few companies actually control that infrastructure. Anthropic may build the AI, but it still depends on giant technology companies for the resources needed to train and run that AI at scale. Think about it this way. Imagine someone introduces themselves as a completely independent airline. Sounds impressive. Then you discover they don't own the airports. They don't own the fuel supply. They don't manufacture the planes. And they rely on a handful of other companies to keep everything operating. They're still an airline. But their independence starts to look a little different. The same logic applies to AI. Because in the modern AI race, access to computing resources may be just as important as access to talent. You can hire the smartest researchers in the world. You can develop brilliant ideas. You can attract billions of dollars in investment. But if you don't have enough computing power, progress slows down very quickly. This creates an unusual situation. The companies building the most advanced AI systems are not always the same companies controlling the infrastructure those systems depend on. In other words, the AI race isn't just about who has the smartest model. It's also about who controls the roads, the bridges, and the power stations that everyone else needs to use. And that leads to a surprisingly uncomfortable question. How independent is an AI company if its future depends on infrastructure controlled by someone else? Again, this isn't necessarily a criticism of Anthropic. In many ways, this is simply the reality of modern AI development. The costs have become so enormous that almost nobody can do everything themselves. But it does reveal something important about the industry. People often imagine AI companies competing like isolated kingdoms. In reality, they look more like neighboring kingdoms that are all plugged into the same electrical grid. And if access to that grid becomes more expensive, more restricted, or more strategically important, the consequences could ripple across the entire industry. Which means that when investors evaluate companies like Anthropic, they may not just be evaluating the AI itself. They may also be evaluating the relationships, infrastructure, and partnerships that make the AI possible in the first place. Because sometimes the most important asset isn't the product. It's access to the machines that allow the product to exist at all. Now we arrive at what may be the biggest question in the entire AI industry. And strangely enough, nobody knows the answer. Not investors, not analysts, not the companies themselves. The question is simple. Do the economics of frontier AI actually work? At first glance, the answer appears to be yes. Revenue is growing. Companies are signing enterprise contracts. Businesses are integrating AI into their workflows. Consumers are paying for subscriptions. Everything looks fantastic. Case closed. Except not quite. Because while revenue is growing, so are the costs. And the costs are not exactly subtle. Training costs are rising. Compute costs are rising. Inference costs are rising. Research costs are rising. Talent costs are rising. At this point, the only thing not rising appears to be the industry's ability to answer a straightforward question about profitability. That's because frontier AI is expensive. Very expensive. Training a state-of-the-art model can require billions of dollars in infrastructure, computing resources, engineering talent, and research. Then, after spending all that money building the model, you get the privilege of paying even more money every time people use it. Imagine opening a restaurant where every customer orders a meal that costs you money to serve. Then, imagine celebrating because customer demand keeps increasing. That's roughly the type of situation some AI companies are trying to navigate. To be fair, there are strong arguments on both sides. AI optimists believe today's costs are temporary. They argue that models will become more efficient, hardware will improve, and AI services will eventually generate enormous profits. And they may be right. Many transformative technologies looked economically questionable before becoming massively profitable. But skeptics point out something interesting. History is full of industries that generated huge demand without generating huge profits. Take airlines. People love flying. The demand is enormous. The industry is essential. And yet airline investors have spent decades learning that popularity and profitability are not always the same thing. An industry can be incredibly important while still being a difficult business, which raises a fascinating possibility. What if AI becomes one of the most valuable technologies ever created, but not one of the most profitable industries ever created? Wait, what? That sounds backwards. But it's entirely possible. Consumers could benefit. Businesses could benefit. Society could benefit. And yet the companies competing at the frontier could still face constant pressure from massive operating costs. The truth is that nobody has fully solved this puzzle yet. Right now, the industry is operating on a very reasonable assumption. Spend enormous amounts of money today. Build increasingly powerful AI systems. Figure out exactly how profitable everything is later. To be clear, that's not necessarily a bad strategy. Many revolutionary industries required years of investment before the economics became obvious. But it does mean that investors buying into AI companies are making a bet, not just on the technology, not just on the management team, but on an economic model that is still being tested in real time. And if Anthropic eventually goes public, investors won't simply be asking whether Claude is intelligent. They'll be asking a much more important question. Can intelligence itself become a consistently profitable business? Because until that question is answered, the AI boom remains one of the largest and most expensive experiments in modern business history. Now here's another fascinating possibility. What if AI eventually stops being a product and starts becoming a utility? Think about electricity. When electricity first appeared, it was revolutionary. The same was true for the internet. Both technologies completely changed society. Today, however, most people don't wake up in the morning and think, "Wow, electricity is amazing." They just expect it to work. They flip a switch. The lights turn on. End of story. Some analysts believe AI may eventually follow a similar path. Right now, AI feels special. People debate which model is smarter, which company is winning, which chatbot wrote a better email. It's all very exciting. But what happens if AI becomes so common that nobody cares which model they're using? What if AI simply becomes another layer of infrastructure that sits quietly in the background of everyday life? In that world, consumers may stop asking, which AI is the most powerful? Instead, they may ask a much simpler question. Which one is cheaper? That's where things get interesting. Because if AI becomes a utility, the economics of the industry could change dramatically. The best model may not win. The most profitable model may not win. The cheapest and most accessible model may win. And that could make some of today's eye-watering valuations look a little different. But there's another angle here that may be even more interesting. If AI truly becomes a utility, then it also becomes something society depends on. Just like electricity, just like internet access, just like cloud infrastructure. And that brings us back to something we discussed a few minutes ago, the growing concentration of power in the AI industry. Because imagine a future where AI becomes deeply integrated into education, healthcare, business, entertainment, software development, research, customer service, and daily life. In other words, imagine a future where AI becomes genuinely essential. Now imagine that most of that capability is controlled by a handful of companies, not hundreds, not dozens, a handful. At that point, the discussion becomes much bigger than chatbots and quarterly earnings. It becomes a discussion about influence. Who decides how these systems behave? Who decides what features get prioritized? Who decides pricing? Who decides what is allowed and what isn't? To be clear, this isn't some dystopian prediction. We're not suggesting that a group of AI executives are secretly gathering around a giant conference table to plan humanity's future. They already have Zoom for that. The point is much simpler. Whenever something becomes essential infrastructure, society naturally starts paying closer attention to who controls it. And if AI eventually becomes as fundamental as many people believe it will, that question could become increasingly important. Because the future of AI may not be determined by who builds the smartest model. It may be determined by who controls the utility that everyone ends up relying on. And if that utility is controlled by only a handful of corporations, then the conversation stops being about technology. It becomes about power, which, historically speaking, is usually where things start getting interesting. Finally, let's talk about two questions that may be more important than anything we've discussed so far. The first question is simple. Why go public now? Whenever a major company announces plans for an IPO, the official explanation is usually some variation of growth, expansion, opportunity, and exciting future prospects. And to be fair, those reasons are often genuine. Companies do need capital. They do want to expand, and investors do enjoy hearing optimistic words. But sophisticated investors usually ask a second question. What else is going on? Because an IPO is not just a fundraising event, it's also a liquidity event. Early investors get a path toward eventually selling shares. Employees who have spent years accepting stock compensation gain access to a public market. And the company receives a public valuation that everyone can see in real time. In other words, an IPO is not simply about bringing new people into the party. It's also about creating an exit door for people who arrived early. Again, that's completely normal. There's nothing unusual about it. But it does make the timing worth thinking about. Why this year? Why not earlier? Why not later? What are management and investors seeing today that makes a public listing attractive now? Those are the kinds of questions experienced investors tend to ask. And that leads us to what may be the biggest risk facing not just Anthropic, but the entire AI industry. A risk that surprisingly has very little to do with OpenAI, or Google, or Meta, or XAI. Because despite what many headlines suggest, the biggest threat may not be competition at all. It may be regulation. Think about it. Governments around the world are becoming increasingly interested in AI. And historically, when governments become interested in an industry, that industry tends to pay attention. Sometimes very close attention. Policymakers are asking questions about national security, questions about copyright, questions about labor displacement, questions about misinformation, questions about market concentration, questions about whether a handful of companies should possess enormous influence over technology that could affect hundreds of millions of people. And unlike competitive threats, regulation has a unique characteristic. It can affect everyone at the same time. A competitor can hurt one company. A new regulation can reshape an entire industry overnight. Imagine spending years building more powerful AI models, hiring thousands of researchers, investing billions of dollars, and competing against some of the smartest people on Earth. Then one morning, a new regulatory framework arrives. Suddenly, everyone has a new set of rules. Everyone has new compliance requirements. Everyone has new restrictions. The race itself changes. That's why some analysts believe the biggest risk isn't whether Anthropic can outperform OpenAI. It's whether the rules of the entire game change before anyone reaches the finish line. And if that happens, being the smartest company in the room may not matter nearly as much as being the company most capable of adapting. Which brings us back to the IPO. Investors evaluating Anthropic may think they're placing a bet on artificial intelligence. In reality, they're placing a bet on several things at once: the technology, the management, the business model, the economics, the competitive landscape, and perhaps most importantly, the regulatory environment that will eventually determine how all of this unfolds. Because the future of AI may not be decided solely by engineers, researchers, or investors. It may also be shaped by lawmakers, regulators, and governments that are only beginning to realize how powerful this technology could become. And if there's one thing history teaches us, it's that predicting technology is difficult. Predicting governments reacting to technology is even harder, which means the most important chapter of the AI story may not be the one that's already happened. It may be the one that hasn't been written yet. So, is Anthropic a good investment? Honestly, that's probably the wrong question. The more interesting question is what Anthropic represents. A company founded by former OpenAI insiders. A company trying to balance AI safety with investor expectations. A company competing in an industry increasingly dominated by a handful of powerful players. A company helping build a technology that could become as fundamental as electricity, while nobody is entirely sure what the long-term economics will look like. In other words, this isn't just another IPO. It's a public market vote on the future of artificial intelligence itself. Maybe Anthropic becomes one of the most successful technology companies of the century. Maybe the economics turn out to be more complicated than investors expect. Maybe regulators reshape the industry entirely. Right now, nobody knows. And that's exactly what makes this story so interesting. The only thing we can say with confidence is that the decisions being made today by Anthropic and its competitors will likely influence how the rest of us interact with AI for years to come, which is a fairly significant responsibility for an industry that, not too long ago, was mostly convincing people that chatbots could write poems.